Listen to what I say. How are you guys today? We got FOMC later. We'll be going over that live in the Discord. I've been checking out a couple of charts here. Let's see. All right, let's see who's here in the chat. Nice to see you, Philios. Nice to see you. All righty. Stream's on a bit of a longer delay. Internet at this location's on the slower side, so increasing the delay is resolving the technical issues. So hopefully the technical issues from yesterday don't happen again. I'm looking at dollar CAD here, and I'm noticing something. The yield spreads are going more neutral today. And price jumped 40 pips. I don't know about you, but I'm thinking that there's going to be a little more risk to the upside here. So to get some information on there are a couple of things we can check out. So first off, FOMC is later today. I won't be in the Discord server if you want to trade FOMC with me and the rest of the people in the Plan the Profit trading community. Just hop on into the Discord and join this trading room voice chat here. Yeah, right here. You should be able to see it now on the stream. This trading room voice chat under general, under the Plan the Profit channel. And that is where we'll be going over the Bank of Canada meeting minutes, which are coming out. And we'll also be covering FOMC. So let me see here real quick. Just got to transition my stuff back. And then I got a new outlook today from Wells Fargo. It's an outlook I particularly enjoy. This is their International Economic Outlook. And this is a monthly outlook that Wells Fargo releases. And if you are new to reading outlooks, this is my number one recommendation. When you're just trying to get into outlooks and you're looking for something to read, this is the number one on the list of outlook recommendations I have. And look at all this stuff in the table of contents. You even have the FX forecasts here at the bottom. And here you go. These are all of Wells Fargo's FX forecasts on a quarter-by-quarter basis. And it looks like they're still anticipating some US dollar strength going into part of the third quarter here. And then from the fourth quarter onward, some US dollar weakness. And that seems to line up with a lot of expectations that over the short term, growth is slowing. This is another bit of economic commentary from S&P Global. They bought IHS Markit, and IHS Markit are the group of people who create the PMIs. Now, this guy, Chris, is actually in charge. So whenever you see, like, oh, European PMIs, German PMIs, US PMI, service PMI, manufacturing PMI, this guy, Chris, he is in charge of the PMIs. And S&P Global just bought the company not that long ago. They just bought the company that runs and calculates these PMIs. And here is a whole summary on how the guy who is in charge of running the PMIs, what the commentary, his interpretation of the data. Look, if you're trying to learn how to interpret macroeconomic data and things like PMIs, why not listen to the people who are already gathering and calculating and releasing all those economic data points and listening to how they are interpreting it instead of trying to come up with your own interpretation first? Learn how whose literal job it is to interpret these numbers. Learn how they interpret these things first, and then figure it out on, like, okay, now that I've been reading Mr. Williamson's analysis for like the last year or two, I have a really good understanding of how to interpret this indicator and how current economic conditions may impact future trading expectations, and how current PMI prints and how those PMI prints change can impact future trading expectations. And the big ol' summary from this is simply, hey, growth continues to slow in the G4 economies. So US business activity slipped to a 5-month low. The UK slowed to near stagnation. The Eurozone fell into a steeper decline. Growth in Japan, meanwhile, held stuck. June's 4-month low. In all cases, that's the G4. The Eurozone, the US, the UK, and Japan, that's the G4. In all these cases, encouragingly robust growth rates seen earlier in the year are showing signs of faltering as a persistent manufacturing malaise is accompanied by waning demand for services. So we are probably going to see a seasonal move get realized. Typically, during the third quarter of the year, that is typically the most bearish, lowest return quarter of the year. I would anticipate now, considering that we're now seeing follow through with these PMIs, and it's not just the PMIs. When you go and you read this outlook, like here are the high conviction views. Look, global growth has peaked. Check this out. Momentum in the US falls, renewed risks in the Eurozone. The UK recession is imminent. Like, guys, growth is slowing down. And institutions are getting back on top of the bear story. Don't get me wrong, there's a lot of institutions over the last week that have just got totally owned by this huge rally in equities and this huge dollar bearish rally that happened. But what? Don't get me wrong, in many situations, when you have those massive moves, some portfolios and some institutions aren't positioned to take advantage of those moves because they're looking at these slower moving indicators that still say the world is slowing down, the outlook is not so great still. So when you have these big relief moves and yet the outlook is still crap going forward, now we're back in a situation where we were in the second quarter, where there's still this great move risk on that is occurring, but all these institutions are still bearish. And now they are getting back onto the narrative that things are not quite over yet. Look, we expect the Japanese yen to outperform the euro. You know what? There was a particular chart that I was told to go and look at, and that was euro yen. Weston Nakamura, he went ahead and said in his latest video that he also anticipates that euro yen could be hit harder and fall faster and further than the dollar yen pair, because the economic environment for growth and inflation in Europe is in such a bad place that it could accentuate euro weakness, euro dollar weakness. So there's a lot of concern over the last 48 hours that I've read about the euro being an excellent short. So real quick, over the next month, let's go ahead and look at our low probabilities for pivot probabilities. And it says you got most of your lows probably around the 153 area. The bearish range bias is the only strategy here that's lighting up green. And that would mean something that looks a bit like this. Range bearish. Yeah. So that looks pretty darn good, and you can probably get some overshoot too. This all is depend on how the Bank of Japan moves, in all seriousness. What Wells Fargo has to say is the yen should benefit from a hawkish Bank of Japan policy adjustment in the fourth quarter and outpace euro gains against a backdrop of noticeably slowing momentum for the Eurozone economy and an end to ECB monetary tightening. Okay, that makes total sense. There has also been other bits of analysis that I've seen talking about how once all the central banks stop hiking and begin to maintain their rates, that net the dollar will begin to outperform, because just on an absolute basis it has one of the higher cash rates available. And if countries are not going to be hiking anymore, then carry trades based off those relative cash rates is going to be played on more heavily. So long dollar trades could certainly be on the books. So, what do we have on the docket for the day? So let's go down a time frame or two, and let's head on over currency indices to the DXY. And let's get rid of that bias. And up and downside. So it looks like the low is in for the dollar today. The low is probably in on the dollar. At least for the current day. I am kind of curious, though, for... Let's see here. Next week. Let's do some trade planning on that USD CAD, right? Because I was pointing out, hey, look at USD CAD's yield spread going more neutral right now. So what I want to do is do a trade plan for going into the end of this week. What are our upside targets? Wow. Yeah, I would not be surprised if we made a higher high this week. Yeah, I would not be surprised at all. And considering that the Bank of Canada is probably going to stay on hold, this would be one of those relative rate trade setups where you would go long USD because the FOMC is going to have a higher cash rate than the Bank of Canada. Also, the US economy arguably will stay stronger than the Canadian economy. However, that's going to be roughly dependent on how well oil performs, because the Canadian dollar is a commodity currency. So real quick, let's do a check on oil. And it looks like oil's topped out for the week. I don't know about you guys, but when I look at this distribution, I see a peak right here and a peak right around here. And that looks like we topped out for the week on oil. So oil's probably done here. A stop at 80.50 looks reasonable. I think I pointed this out in a stream earlier on Monday or Tuesday. Can anybody in the chat confirm whether or not they actually heard me talk about going into like the sub, like just below $80 on crude oil? I'm pretty certain that I mentioned it on stream. Let me see if I brought it up in the commodities channel at all. Did I make any post on it? I don't think I streamed it. Let's see here. You took long in euro dollar. Why? Well, I went long in euro dollar earlier, right? So here is euro dollar. So earlier in the week, we had this move right here. Want to pull up the odds, show you what I'm talking about. So I'm looking at the probability weighted pivot low for the week, right? We had this extra dip, right? As Big Smoke would say, we had this extra dip here into the 1.5 weekly pivot point. And it's moved nice since then. The candles have stayed relatively small. the yield spreads have begun to get a little better at this point. And on a relative basis, from euro to US dollar, I think that there's some leeway still for this thing. I'm effectively saying I think the low for at least euro dollar is in. Note that just because I think, for example, dollar should be getting strong, it's good to qualify that based over different time horizons. So when I go over all that trade research and I come to the conclusion that I should probably be risk off and long the US dollar, understand that a lot of those forecasts are for quarter timings. So third quarter, fourth quarter, first quarter of 24, second quarter of 24. That's not in this trading time frame of a week, where we're looking at these indicators and coming up with risk strategies of like, okay, how many pips do we need away? What's the volatility? What's going on here right now? So this is a very tactical view, while that's a very strategic view. So looking at this strategically, the trade that I have is long euro dollar. Now, all that considered, I am still taking long dollar trades, right? I am looking for an opportunity sometime next week to get long USD CAD between central pivot and S1 on the weekly pivot scale sometime next week. Somewhere around here, I would like to get long. So the long trade has already come and gone, right, for this week on the CAD. And the Canadian dollar is a lot weaker than the euro dollar. Euro is actually holding up in a lot of pairs. I mean, look at Euro CAD right now. It hit that probability weighted pivot low, and it's bounced. It'll probably continue to bounce. Against the yen and against the dollar, well, more specifically against the yen, it's now at a probability weighted pivot low for the week. So it might be done. It might be. The truth is that this is all probabilistic. Now, it's one thing for someone to say, oh, we're just playing a game of best guess, and we're just trying to estimate, oh yeah, I make money 70% of the time, and 20% of the time I get stopped, and da-da-da. At least with these tools, you can actually see your probability. You can actually see, oh yeah, with this percent of time I lose, this percent of time I win. So when I look at euro dollar and I'm putting my stop, at S2, which is 110, and I see we've reversed and we've hit all these likely lows, I just have to look down here and say, well, 4.5 plus 13.5. Just add those two probabilities together. It's a little less than 20%. You're coming down to like 18% of the time you go below this S2 pivot over the last 22 years. That comes down to like 82% of the time the low historically for this week is in. Now, when I look at these odds for next week, I'm pretty optimistic about, getting my low around S1, even maybe a little below S1 sometime next week. When I look at next week's odds, I really would like to get short. So if my expectation right now is that the low is likely in, there'll probably be some rally into a likely high next week. So maybe just above 111. Or maybe at this R1 pivot where the probability weighted high for next week occurs. Roughly around here, again, just above 111. That's 111.35. So roughly around here in this 111, 111.50 area, I'll even draw a little box around it. I'd like to get short. Now, that's under the assumption we first move higher. So if I'm anticipating that we'll go from here, sometimes I'm like shift clicking, trying to get my measurement tool to work. So if we're currently at this price right here, and I'm thinking we're going to go up here, we're going to do something like that. That could be about 60, 70 pips. Effectively something along these lines here. And no, I have my probability saying, okay, going into this price range above 111 is in the cards. I'll go ahead and timestamp this. So going and doing this move is definitely in the cards, and then you can then look back and draw your supports and resistances. You could say, okay, we technically have like a resistance right there or something. I don't know. One concern I do have as far as risk management is that the daily yield spreads are still net negative, but you can see what I mean by the short-term yields are improving. So don't get me wrong, net overall, when you look across this board here, all the lagging, all the 7-day and the 25-day lags for this yield spread are all quite negative, and that can lead into lower prices. So that's a risk. However, I'm looking at this shorter term yield spread and I'm noticing, okay, this could lead into some more significant relief. Later today, we have FOMC. They'll likely do their hike. How euro-dollar will move is going to be dependent on how hawkish their forward guidance is. And I don't think that they're going to be as hawkish as the ECB. I think that Powell is going to do what Powell does, and he's going to, tiptoe around it. They'll do their 25 basis point hike. They'll probably be asked, why didn't you just hike at the last meeting? And then hike at this, and then pause. Yeah, thanks for that, right? I see that. Let's see. What else is there? But yeah, this is kind of my basic train of thought, as I'm seeing some shorter term movement going on right now. Going into FOMC, there's certainly a risk that this thing continues to move lower. But then when you look at the shorter term time frames and look at the yield spreads, it's just, the yield spreads. The bond markets are moving in favor of euro still. One more time above 111 is my expectation going into, not this week, into next week. Sometime next week, reaching above 111. If that, just having some move higher. And then, you got a probability gap right here. See this, where it says 0? Between central pivot and S0.5. This 0 represents the number of times we got a low for this next trading week. These aren't the odds for this week or next week, or these are the odds for the 31st week of the year for where the low occurs between any two pivots. And this is saying 0% of the time over the last 21 years has there been a low between central pivot and S0.5. So if we open next week below the weekly central pivot, my baseline expectation is that the thing is probably going to move lower at least another 60, 60 to 100 pips automatically on the table. So going into next week, depending on where we open, it's going to depend on how bearish we are. If we open below central pivot, I'm going to be bearish right off the bat. If we open above central pivot, I'm going to wait maybe till we get to the 111 area and kind of wait and see from there. Okay, let's head on into maybe something like Aussie. Aussie's yields are still negative. I feel a little cheated. I feel a little cheated. I set my stop a little too tight, and I got stopped out on it. Thank God, though, that it was a very small trade. So, sure, I lost the trade, but the way I have my self-risk managed, I'm totally fine with losing 6, 7, 8 trades in a row, and then I know all I need is like 1 or 2 decent trades, like just relatively okay, not even like phenomenal setup. I mean, just hit my baseline expected value on 1 or 2 trades, and I can make up for a lot of the minute risk that I put in on losing maybe 5 or 6. Very asymmetric risk to reward keeps you in the game for a long time. So, yeah, while this kind of upsets me, it's, am I going to cry over 50 pips? It's like, no, not really. There's plenty of days that move 50 pips. There's plenty of days that move 100 pips. I'll trade another day. And ultimately, in the end, what you want is to have your freaking account not get ruined. Your risk of ruin is the single most important metric in your strategy. Depending on how you trade and how you position yourself and what risks you're taking, if there is a possibility that your account can go to 0, that your probability for ruin, right? Another word for that is blowing up your account. If the probability of that is not 0, you're doing it wrong. That has to be 0. Do not ever put yourself into a position where your probability of ruin is 100%. So, on $1,000 account, you do $2 risk, $1 risk, $5 risk. You don't go and put on $100 or $200 or $300 of risk on a single trade. Because the likelihood, if you're brand new, that you're going to screw that up is almost a certainty. It's almost a certainty. Let's see, what else we got? We got New Zealand still moving sideways. I did exit out of my New Zealand dollar short hedges. After this dip, I was like, okay, all good. And somewhere around here, I got out. Real quick, though, let's check out the yield spreads on this. Oop, don't want that on. The yield spreads are all positive. And this is another reason why I got out on this. Is that not only are the long-term yield spreads still moving positively, but the short-term ones are also increasing. So that kind of flashed a signal at me and said, hey, there is still gas left in this New Zealand dollar tank, I pointed out in the last stream that I thought that there was some positive drift still left in this run-up. I mean, we can go ahead and increase this time to, let's say, the last 6 weeks. Let's do 2 more. 1, 2. Yeah, there we go. So this is kind of what I'm saying is maybe you get another rally up to like the 63s. Sometime next month, you get a rally up to the 63s, and then the thing actually rolls over. Because the RBNZ is done hiking at this point. And for all intents and purposes, those are very flat probabilities. I would not feel super comfortable going long in these areas here next month. How about our high odds? I mean, I can just look at the dashboard in the bottom left there, and the only strategy that flashes green is the bearish range bias. And that's effectively saying, yeah, the only strategy that has the best win-loss, and not only that, but also the best profit factor, is the bearish range bias setup. And that would be this setup. And this is for the whole month ahead. So that'd be this sort of thing. And look at that. I didn't even have pivot probabilities on when I was doing that little basic expectation of saying, okay, maybe you get a little bit of a pull-up here into the 63s. Yeah, real quick, I'm gonna kajigger something. So that's 2.7. Yeah, let's go with that. So from the current price up 2.7% brings you right up to this R1. So you could go into the upper range, the upper half of that 63 handle, which is roughly right where the probability weighted pivot high is next month. So I'd feel pretty all right catching a short there next month. But if I have some baseline expectation that we're going to be going up that high over the next, let's say, 2 weeks, why wouldn't I be short the US dollar in the meantime? Then from this high, this next local high that I'm anticipating coming in over the next, I don't know, 2 weeks or so, take the short from there into the rest of the quarter. So take that short from August into September and October, which have particularly bearish seasonal aspects. And that's a decent idea for a swing. But that's an idea that need to get broken down more thoroughly, looking at outlooks and specific risk events on the economic calendar and what the current expectations are for those future events. So just rudimentary, doing some rudimentary screening here, looking at these odds. Yeah, this seems like the setup I'd want to go for on New Zealand dollar next month. Entry points on power plug SoFi. Oh yeah, this looks like it's gonna roll over. Real quick, let's go back to unbiased. And let's actually load pivot. Actually, how much historical data does this thing have? Yeah, it doesn't have that much data, so Notice how range probabilities isn't loading? Well, that's because we have to set the look back to like 1,000 bars. Something like that. Well, not even 1,000 bars. 500. Yeah. Not a whole lot of data to deal with. Right now I'm just trying to figure out how many bars there actually are. Alright. Yeah, it's way... Yeah, once you started trading above $1, $9.20, that's where you're starting to get into these crazy high areas. And shorting up here is kind of a death sentence. And it has been, at least over the prior 4 days right here, not necessarily these 4 days, although the volatility is much smaller here. At least the volatility of gaps and open to close range is much smaller in this area. Real quick, set that back. But yeah, these odds, when you only have 1 or 2 years of historical data to work with, you really are going to be looking more at aggregate stuff. So this is in the finance subsector, so you would want to look at like NASDAQ finance. Oh, finance. I think that was it. NASDAQ. Yeah. I mean, why don't we just look at the NQ straight up? Top is likely in for the month. Yeah, don't we have a bunch of earnings coming out on the S&P? How have those earnings turned out so far? And look at that, it's just holding that linear trend so far this week. Yeah, if it were going to, yeah, I would not be surprised if due to earnings you went into the, the 46.5, 46.4 range at all. Would not be surprised at all to see another bump up. How about our high odds? Oh, and look at that. There's also your probability weighted pivot high. Going into next month, it's more range bound. So yeah, once you get to that 46.50, 46.40 area next month, I wouldn't say that there's a short right now, just looking at this information, at these indicators and what they're indicating right now. I wouldn't say that there's a great short right now, but get into the end of the first week, beginning of the second week of the month of August, around the 4,600 handle, I could absolutely see some good shorting opportunities for the month. It might be the first down month since February. It's got pretty good odds too, but it's just a matter of you got to be extraordinarily careful when you're trying to short into these crazy rallies. Lord knows how many people have been killed and totally ruined over just this rally here. Right? And this has been a big old rally. However, reiterate, things are not looking good for economic growth, and equities around the world require an increase in that growth function. It doesn't help that inflation, is getting hit harder and harder and harder by central banks. Yep, I can see it, David. Awesome. Microsoft and Google. Hey, all right. That sounds nice. Da, da, da. 1 second. I got to figure out what's going on for my transition. There we go. Yeah, actually, I want to check out Google. Yeah, that is not a super positive trend. But look at that, same exact setup. So it's effectively up here. And then how far? Wow. Yeah. And take it down there. Let's timestamp that. Okie doke. Hey, look at that. Wouldn't this indicator works on more than just FX, guys. Probability weighted pivot low at 117.30 on Google. And yeah, don't get me wrong, it didn't tippy tip pick out the low, but it was only about what, 1.5% off. It was a $2 move below it. And looking at these probabilities, you probably would have wanted to put your stop at S1. Let's actually look at our low odds here. Really, is there not 5,000 candles? Let's try 3,000. There we go. Oh, and check that out. Right here, you got a nice little bump in your distribution. Increase the number of simulations. Maybe that'll bump that up. Ah, took too long to load. Yep, check that out. If I hide the bars, you can clearly see you got a peak right here for your very bullish opens. And then you got another peak right here. And we bottomed out right there. So pivot probabilities can give you the general pivot range for where your low is going to come in. And then range probabilities can help you hone in without using the seasonal data that it uses. Okay, generally speaking, this is the distribution of low returns that we see on this daily time frame on a month-to-month basis. And there's a peak in your low distribution right here, and then there's a peak in your low distribution right here. So maybe you put in one trade here with very, very, very small risk because you got to have a stop way down here. And note how that pivot point stop loss here at this S1 also lines up where you start to see like your tail risk start to show up with your range probabilities here. Somewhere in this 114, 113 handle. You put in your stop right around there. Yeah. It looks like magic, doesn't it? I mean, if you want, okay, let me market it. You want to buy the stuff. The links to it's in the description. You just join the trading group, the boss trading group, right? And you'll get access to all this stuff on TradingView. And then one-on-ones with me, I'll show you how to use it. And you get access to a trading group. And then you can post trade plans. We can go over the trade plans, interpret them, share resources and research, like how I'm going over the research here for all the stuff with PMIs and Wells Fargo and sharing that with you guys here. When I go ahead and I do all my trade research, I go ahead and I link back to all that stuff in all of my trade plan posts. So yeah, that's all well and good. Man, yeah, Google was a nice recommendation to point out. Good recommendation. Let's see. What else was there to look at? I mean, there's also this low here on Eurodollar. Isn't that kind of nutty? Range probabilities was telling you, hey, maybe there's a low right here, and then there's risk management with pivot probability saying, yeah, but typically this month goes a bit lower, so yeah, this was tricky. I'd know how to trade that, but tricky. You don't usually see that kind of shape. Anyways. What else is there? Euro pound. Wow. We're right at the probability weighted pivot low. And right here at the edge where you're starting to get tail risk odds. Yeah, so this is definitely a be careful sort of spot. You'd probably want to wait this out. I mean, let's look at our closing odds. This is something where you'd have to look at your end of week odds. You know, there's some pretty decent risk to reward here to going long. Yeah, I would say that's actually there's a not so insignificant probability you actually do get some kind of move that looks like that. That sort of move is not out of the cards. Oh, wow. Euro Aussie. Look how strong that one's got. Oh my god, that was a fantastic trade. That was fantastic. Alrighty. Let's look at our low odds. Damn. That thing really moved. Well, that was the expectation. Was that the expectation for the month? Seriously, was that the expectation for the month? Yeah, check that out. It's hit this spot 3 times now. Wow. It'll probably continue to hold that low. Based off the odds I'm seeing. But yeah, that is a huge move. Wow. Yeah, you don't usually go down that far. Yeah, buying longs right here. You're just getting stopped out once you start moving past that S1.5 pivot. Yeah, man. I'm just kind of going down the watch list, so if you guys got any recommendations, that'd be a good time to get those in. Still room for lower moves on New Zealand dollar, in all seriousness. It's just this daily yield spread. I always prioritize the daily yield spread over these lower time frame yield spreads. But yeah, I'd be on the more careful side here. Definitely going to be on the more careful side. So this is my US dollar beta. Let's look at our high odds here on US dollar. Yeah. Pretty good shot of it continuing to move higher. Let's look at our euro. Well, actually, that means lower. Yeah, looks like euro is done devaluing. Net, equally weighted. So now let's look at our close odds here. Yep. Euro looks like it'll do pretty all right from here. How about our yen? Yen. Yen's probably going to stay sticky and close lower. And CAD's probably going to get weaker. So let's compare dollar one more time. Yeah, dollar's probably going to end up closing higher. I'd say crossing below that price, I'd start to get concerned about dollar strength. Because this thing going down is dollar strength. But based off these odds, I am not all that concerned. Until, see, next week. 75% of the time, dollar closes below this central weekly pivot, which means on this custom index that I've made, where US dollar is on the right-hand side, when this chart goes down, dollar gets stronger. So 75% of the time next week over the last 16 years, dollar got stronger on a closing basis. So I would want to probably short, buy any dollar dips, right? Around that R1 next week. So yeah, this lines up with my current expectation for how I think dollar's going to play out. Here's some pound strength. You can see right off that very high probability zone for this week. And then next week, it's probably going to be the same old story. Australia getting weaker, probably will continue to get weaker into next week. And New Zealand, probably not as weak, right? Oh. No, that can get nasty, but net probably not. Any strength? No. Not really. So any New Zealand dollar strength that shows its face next week is probably a decent shorting opportunity. Yeah. Euro yen. All right, I'll check out Euro yen and Euro Swissy for you guys. And feel free to recommend any chart. I'll do analysis on bonds and commodities. The more assets that I get to do analysis on and learn about, generally the happier I am. Because just looking at FX, it's like, okay, yeah, bump, that's FX. Oh, and then doing some equities, done, that's some equities. When I get to look at some commodities, when I get to look at some bonds, and some like obscure crypto stuff, that can be quite fun. But my expertise is mostly FX. So, Euro Swissy first. Euro Swissy. Ooh. That looks like a very likely low. Holy crap. Yeah. I would not be surprised if most of the closes for this week were above here. Ooh. Those low odds look very, very good, but these closing odds don't. So just as a basic definition check, when I go into the settings here and I change the data source to low, this is trying to tell me the probability of where the low is likely to be between any of these two pivot points. When I change this data source to close, it tells me where are we likely to end or close out this week. What's the probability that we close this week between two pivots? And this is telling me that generally once you move this far down in the week, you actually have a decent number of closes that occur roughly around here. My expectation looking at these odds is you just go sideways. So I don't think this would actually be a particularly great trade, to be frank. I don't think this would be a great trade. Maybe next week you can get a bullish trade, but even then the odds aren't fantastic on that. No, this is live. This is live, David. I'm seeing your chats. Let's see here. Euro Swissy. No, we already did Euro Swissy. Yeah, that's Euro Swissy. Euro Yen. Oh, gotta reload the chart real quick. You know, a long here isn't the end of the world. I think a long here actually would be quite all right, but you would need to do something like this. You would need to take it into the high of next week. This would effectively be like a 4 or 5 day trade that you'd need to hold. Because you'd be buying this low and trying to take it into these highs for next week above R0.5. And 85% of the time, your high, your top for next week occurs above the R0.5 weekly pivot. So, and that's why the bullish range bias is the only bias that's lighting up green. However, could we continue to move lower this week? Actually, probably, yeah. If you go below this S1, I'd be concerned about going to S2. And if you just ended up closing sideways, you might be able to get some buys around 155, or even just below it, before moving up to this R0.5. I just think that considering going into Friday, which is when we have the Bank of Japan meeting, that the Bank of Japan is expected to do nothing, and it'd be a pretty big faux pas if they surprised. However, they always can. They always can surprise, so you got to have limits on how much you're willing to risk. But if you're taking the nominal scenario, which is the basic expectations about what we have for the Bank of Japan right now, for continued loose monetary policy, and you take these probabilities at face value, then the way I would interpret this chart or any sort of trade setup is there's maybe a long from here to here, or along from here to here. There's this area roughly around here that I'm concerned about. And this is another reason why when you first enter into a trade, you don't enter in at, 1% of your account. Sometimes a trade goes sideways for like 2 or 3 days before it rips. Sometimes it goes like, look, right here. This is exactly what I'm concerned about occurring. And then you get your rip, and then you hit your targets, and that's that. Here's another 3-day consolidation. Here's another 2-day consolidation. Here's another consolidation. Here's another consolidation, right? Here's another consolidation. So yen has this characteristic of consolidation, rip, consolidation, rip, consolidation, rip. So maybe you get another consolidation roughly around here, and then you rip. However, it's just a matter of when you see these types of trading opportunities, you have to take into account, okay, I have to have some risk on now, because otherwise, if I don't have a trade on, I'm not going to make or lose money. I'll just be flat. And I would rather, take the little tiny risk, the one that a risk size that you could afford to lose that trade maybe 50 to 100 times and still be A-okay. Because generally speaking, the first trade you put on when you're trying to position into something, it's probably not going to be a profitable trade. Very rarely is the very first time when you put on the trade, at least discretionarily, are you always going to be profitable. And generally, in the situations when that is profitable, that's when you should get very excited, because it means you could be very, very good on your timing and the direction. And because you start out small in that scenario, the next trade is a bit bigger. And now you've sized into it a bit more. You go ahead and you make your 100 or 200 pips. And it more than makes up for those 5 or 6 tiny first trade losses that you had before trying to figure out, optimal entries for a particular trade idea you have. And because now you're not getting run over, you size up. It's like things get a whole lot simpler when you focus on minimizing losses greatly and focusing on maximizing opportunities. It's kind of like solving an equation, right? The left side of the equation is your risk management. The right side of your equation is your opportunity. You want to maximize the right side, and you want to minimize the left side. You want to minimize your risk and maximize your reward. And you're only going to be able to do that with a lot of hard studying. You're going to have to study stats. You're going to have to study some math. You're going to have to study economics. You're going to have to study finance. And then you're going to have to listen to experts who know what they're doing. And, I'm maybe going to say something a little hypocritical here. Not watching any Joe Schmo on YouTube. You just, look, don't get me wrong. You go ahead and you watch me because I know more than most people. But you go ahead and you listen to a guy who's drawing support and resistance, and their chart looks like this crazy abstract art piece of all these Fibonacci things. And, there's a study on Fibonacci retracements. The only Fibonacci retracement that has any sort of significance is the 50% Fibonacci retracement. But not only that, there's another condition. That significance is over a 2-week period. So if you're drawing your Fibonacci retracements over intraday timeframes, and it just so happens to hit the 50% and move higher, it's noise. It's guessing. So compared to someone who's just literally guessing by doing a bunch of TA and looking down economic calendars and getting fed economic news based off aggregate news feeds, you know, I'm in a different class because I'm getting research directly from S&P Global. I'm getting research directly from Wells Fargo, directly from Danske Bank. And then I'm reading tens and tens and tens of pages of professional analysis. And I've been doing that for the last several years. And then I'm like, oh, here's the current expectation for the next week. I'm never always focused on trading the current week. Everything I do revolves around focusing on what's going to happen next. What risks could occur next? What opportunities could occur next? And generally over a 1 to 2 week time horizon. Not necessarily, you know, oh, what's going to happen for today? Sure. I can go ahead and I can do that because I have tools that can be supportive of intraday trading. And I very, very frequently have done great trades with these indicators on a day-to-day basis. Really great stuff. But as far as the quality goes between some of the information you'll get on this stream and the type of analysis, and I mean, there's not too many channels and traders on YouTube who have a statistical breakdown right in front of you, and they're going off to another chart and showing you institutional grade research from some of the most important people alive today in economics. There's interviews that I've watched of this guy, Chris Williams, where he goes through and breaks down his career at IHS PMI, at IHS Markets. There, 1 second. Yeah, this one right here. There's this video right here by the Center for the Study of Financial Innovation. It's got 218 views. It's 15 minutes long, and it came out a year ago. And I've probably watched this thing twice. This is the guy, this guy here on the right-hand side, wrote this article. Chief Business Economist for S&P Global Market Intelligence. Well-known commentator and is regularly quoted in international business print and broadcast press. He sits on a number of economic advisory panels. So I'm not going to some third or fourth party getting information down the grapevine from some economic news aggregate. I'm going directly to the source. And I'm showing you where I'm getting it, so then you can duplicate it. And then I'm just breaking it down and going over the trades as I see them based off my setup. So I'll take all that information into account, and very, very quickly I'll come to a conclusion about, okay, this is generally how I should be biased about the macro economy. This is what my strategic outlook should be over the next few months, that I should be aware of how maybe those impacts, those things will swing me. But these probabilities are still pretty good based off the risks that I have. So let's say I'm anticipating maybe those strategic views to come into play, and these probabilities disagree. Then guess what? I know what my levels of risk are going to be. I know where my stops are going to be. I know where my entries are going to be. And I know that if my macro and my micro, my technical, probabilistic, tactical setups, if they disagree, then that's a sign, okay, I need to stick with the smaller sized trades. If I don't have an agreement between a macro view and a probabilistic trading view that I have set up here, then I am not going to go gun-ho and trade large size. That makes me uncomfortable. Right? Even trading large size here, I want to see like a day or two come by until I actually find a way to commit to something like this. The ECB meeting has to pass. The Bank of Japan meeting has to pass before we see some significant movement, I think. And that is insanely reasonable. Once those two meetings pass, you get one gun-ho movement left going into the first week of August. And then we'll go ahead and look at the month here on Euro Yen. Where do most of the highs occur for the month on Euro Yen? Oh, looks like they occur roughly where most of our tops during the first week of August occur. I'm already now planning for the swing trade for the month of August. It could look something like this. So, yeah, while the yield spreads are red here, they could go ahead and get green again as the ECB hikes and the Bank of Japan doesn't hike. Then, as we get into the end of the first week of August, the beginning of the second week of August, it'll probably roll over. Somewhere around here, it'll probably roll over. So, let's go ahead and do this. Oh, check that out. So here, this is the seasonal forecasts bar forecast. So I can pull up any asset and I can get these bars forecasted that tell me, hey, this is generally what the rest of your month's going to look like, and here's what August is going to look like. And I can see from the 6th trading day of August, you get some pretty nasty negative expected value, except for this one day here in the middle of it, the 9th trading day of August. So 1, 2, 3, 4, 5, 6. Oh, that's the Tuesday of the second trading week of August. So right here, that's where the roll-off actually occurs. So maybe on Monday or Tuesday, I probably want to be short Euro Yen. But even then, it's just flat seasonal expected value for the whole first week. If there's any sort of up move going into Thursday, Friday, it might be shortable. And you get this tool as well, this seasonal forecasts tool, when you sign up to the trading group. It comes with pivot probabilities. It comes with this yield spread. It comes with range probabilities. All this stuff gets included together with, the trade group and the one-on-ones and the whatnot. Good stuff. Man, time has really flown by. I've been going for about an hour and 40 minutes. To the Discord, hang out, and go over trade plans with anyone who's willing to post a couple of their own trade plans where we can do some research together, go over outlooks, kind of improve our own competence and understanding of markets, and help each other find trading opportunities and become more risk aware of the scenarios ahead of us and in the trading periods ahead of us. All the economic events ahead of us too. Those are all sorts of different risks. I'll be in this trading room chat right here on Discord. The link to it is in the description. And I'll be in there for the Bank of Canada meetings when those are released, the meeting minutes, and for FOMC later today. I'll be in here for both of those. Okay. And with that, that'll be the end of the stream. I invite you to come join the server, post some trade plans, and to join me in the trading room as we go into FOMC. I hope you guys got a lot out of this particular stream. I went over some more intermediate, longer term stuff and went over more how I interpret my indicators. And yeah. This was a pretty popular stream. So thank you guys so much for watching. I appreciate each and every single one of you. And I'll see you guys tomorrow, 4:30 Pacific, 7:30 Eastern, for the next daily plan stream, where we'll be going over and reviewing some of the trades I went over today and the outcome of these central bank meetings. We also have the ECB meeting tomorrow, so always keep that in mind. Alrighty, you guys. I'll see you in a bit.